we're on.
We're live.
Let's see. Welcome in, everybody.
Good evening. Happy Wednesday. Happy third week of January, I think. Time is going by way too fast.
I know, right? January's almost over.
Way too fast.
Well, welcome to our home buying class. This will be Home Buying 101, Understanding the Benefits of Home Ownership. My name is Victor with John L. Scott, and this is...
And my name is Haley Beuthel with Primary Residential Mortgage.
Awesome. Well, we have this little presentation prepared for you guys. We'll go ahead and get started. And if you have any questions, go ahead and type them in the comment section of whatever platform you're on. As we finish up our presentation, we'll go through a Q&A portion at the end where we'll just go through and read your questions and answer them one by one. So here's the beginning of our presentation here, Home Buying 101, Understanding the Benefits of Home Ownership with me, Victor Mitchell with John L. Scott, and Haley Beuthel with Primary Residence Mortgage. Here we go. We'll present this screen one more time at the end. If you want to screenshot it now or later, feel free.
Yep. Feel free to be taking photos throughout this entire slide. We are so excited that we're able to join us, and this is a great place to just be educated and have fun and talk about real estate. So when we're going to go through this very beginning, buying a home, the process, this is a great outline of what it really looks like to buy a home. And what we're really going to do here is walk you through the couple of phases, outlining both of them, and then we're really going to go through and dig deeper into all of the little details that go along with home buying. But let's start out with a high overview, and then we'll jump into more of the little details. But beginning phase, the shopping phase. This is the very beginning part when you're just kind of thinking about, am I interested in real estate? Is this for me? If you're serious about jumping into the market, first thing you need to do in the shopping phase is step one, get all of your finances in order. And this can truly just be, a little checklist in your head. It could be a checklist that you write down, but writing out a monthly budget, writing out all of the things that you pay for monthly. So whether it's utilities, phone, whether it is going to be anything, housing, make sure to include all of that in your monthly budget. But check all of that out. So when you're talking with your lender, when you're talking with your agent, and even if you're looking online, you're able to kind of know, does this monthly budget that I have in my head line up with a projected monthly payment for a home? That's a great way to start. Step two, assemble your dream team. This is the part where you get to find your agent and your lender to be loyal to. And this is crucial. If anything you're going to take away throughout this entire presentation is truly to get with a lender and get with an agent that are going to be able to, number one, understand your unique financial situation. And number two, they're going to be able to know your market, your timeline, your area, and create that game plan that is going to be the way that you want to buy your home. This is not a one size fits all type of journey. Everybody's going to go through something different, and having an agent and team behind your back that are going to be able to have the hearts of an educator to keep you informed throughout every step of the process is so, so important, especially if you're a first-time home buyer, but also for returning home buyers. Remember, markets change daily. So if you haven't bought in 3 years, it's going to be a little different. I am sure of it. So step three, do your homework with your agent and your lender. Do your homework on your own. This is the time when you can really start studying up on all of the little things that go into home buying, finances, down payment, earnest money, anything that is going to be important to you. That's also really important when you're studying. Find what's important to you. All of the things that you want in your home buying process. with the lending and in the real estate, so you know that you're ticking off all those boxes. And then lastly, in the shopping phase, get pre-approved with a lender. Get it done as soon as possible. And this is so important. So when you are shopping for homes, you know your budget, you know your maximum budget, you know what your monthly finances are going to look like, and you have an idea going into home shopping with your realtor and the home buying process. All of that is going to be super smooth for you, because the last thing you want to do is fall in love with a home that we don't always qualify for. So get pre-approved with your lender. After you've done all of the negotiating stuff and you've gotten your pre-approval, you found the one and you put in that offer, and yay, you won. Now it's time to go through the kind of second half of all of this home buying phase, and that is after your offer is accepted. So the first step after that offer is accepted is send that PSA to your lender. So that's kind of A1A. But then what we'll be doing right away is getting your earnest money all situated. So it's a check that you'll write and it acts as a deposit. It's usually 1 to 3% of your purchase price and it goes towards your down payment. This needs to be readily available in a checking account. You can't do it through cryptocurrency. You can't wire it. It's got to be in that account, and it needs to be available. We also need to, step 2, finalize the loan application with your lender. This is, if you haven't gotten your underwriter credit approval and you haven't gone through underwriting, this is that time. You're going to get all the documents in. If you've given us that PSA, it's going to trigger what we call TRID, and it means that we can actually lock in your loan. This is when you lock in that interest rate. So important interest rate. So that is that time when you'll get to talking with your lender or lenders, because you always want to have options. And great real estate agents, just like Victor, know that he'll have great lenders for you. Get pre-approved with a couple of them and get to know them, because this is when you're going to want to finally make that decision. Step 3 is, after you've done all that fun stuff, get your professional inspection done. This is so important when you're in the home buying process. You're going to want to be able to know what you're working with your home. I guess then the next part is the lender will then order the appraisal of the property. This is ordered through your lender, but most of the time, and ask your lender how, who pays for this and when. Sometimes the lender will front the money up front and will finance it into your closing costs. Other ways is the lender will have you actually come up with the money up front and you'll pay for that appraisal, but it is done through a third party and your lender will order that for you. The next step would be for the neutral escrow agent overseeing the signing and disbursement of funds. And then finally, once you're able to record the transaction, you get your closing keys in step 6. So that is the fun part, the one that we're all looking forward to. But after this whole long journey, yes, woohoo, you get your keys. So that is so exciting. All right. And another thing to pay attention to, if you are going to be taking pictures of any screens, this is an important one. This is pre-approval documentation. You are going to want to have all of these in order even before you get pre-approved, even before you get off Zillow. Try and have all of these just readily on hand if you are really thinking about going to the buying process, because I'm telling you, if you are getting down to an offer and that you love right away, and then we don't have bank statements from you, there's going to be a little bit of chaos going on. So have all of these documents in order, and we'll go through them right now. So the basic pay stubs. If you're a W-2 employee, and this is very important, self-employed borrowers, you don't really need to worry about this. But for you guys, you need your W-2s, year-end pay stubs. You need 2 most recent pay stubs. Everyone does need that. For self-employed folks, you will also need a year-to-date profit and loss statement that can be audited or unaudited, and we are happy to send you templates for that. We do need tax returns, including all schedules, personal and business. We need bank statements and assets. So bank statements need to be 2 months, 60 days. It has to be full documentation. No lender is going to accept the screenshot on your phone of your bank account balance. That is not going to fly, unfortunately. So please get all of your pages downloaded into us as soon as possible. So non-payroll deposits big deposits. We're not talking about $5 that you put into your account from Venmo. These are going to be large payment deposits. So for example, if you've recently sold a home and you have $200,000 somehow in your account, we're going to want to document that and know why. If you've got a large cash out refinance, that's another thing, is not only are we going to look into how long we need to wait, but we also need to be able to document that if you're going to turn around and use it on any sort of home purchase. And then finally, for Social Security, disability, we are going to just need awards letters. And then very specifically, we'll run through these very kind of spot checking documents that we'll need. So if you're going to use a gift fund, gift letter from mom and dad, proof of the donor's gift capacity, so how much they're willing to put down. We need the proof of transfer and the proof of deposit as well. Any letters of explanation, and these can be credit issues, gaps of employment, bankruptcies, things that we can document with a simple letter to the underwriter saying, this is why I had a gap in employment, signed and dated, good to go. Any credit documentation for any negative credit items. So if you are doing a credit repair with someone of us at PRMI, you are able to get any of those removed, or you're paying down balances, we are going to need to document that new balance in your account and that you've made the change so we can get it fixed with your credit. And then finally, name and phone numbers of landlords for 2 years, just to document all residential history. All right. So then when it really comes down to pre-approval, credit scores. This is so important. And we know as lenders, your credit score is so important to you, and that you don't want to be pulling it a ton of places, and you don't want to have it impacted. Right off the bat, it's so important to know that when you're home shopping around with mortgage lenders, you have 45 days to pull your credit at different lenders to have different options without it hurting your credit score. So have a lot of faith that if you are working with a stellar agent like Victor and they're giving you 2 or 3 different lenders to go get pre-approved with, you should go do that. You really want to, because you're not going to be hurt by it, and it's going to make you the most informed buyer out there. So credit scores, how do they work and how do they impact home financing? Well, there are 3 credit bureaus: Equifax, Experian, and TransUnion, and the credit scores range from 350 to 850. All investors, and I know it says most, but we all use the middle score numerically. And if there's 2 of you or 3 of you, whoever's middle score is the lowest is the one that they're going to use. So it's really important. So if you have a significant other, sometimes it's super important to check their credit before you apply too. So if your credit score is middle score is 750, but then your spouse's credit score is 580, you are going to unfortunately have to use the 580 credit score. There's really no way around it. So then the minimum credit score for most loan programs is 580. USDA goes down to 500, but there are some stipulations on what that means loan-wise, so check with your agent. If you're going to be using down payment assistance, that is a 620 credit score minimum, and it's super important to also check in with your agent. Best credit scores for like a prime pricing bracket is going to be in the 740 plus range. So if you're above that, you're golden. That is a great pricing bracket for you. And factors of credit scoring. If you look over at this wonderful little graphic here, you can see that amounts owed and payment history make up almost 65% of how credit scoring works. So that is super important to pay attention to when you're trying to manage your credit. And then looking at, it's 10% of any new credit inquiries, 15% of the length of credit history, and then 10% of like credit mix. So credit diversity is really important too. But if you are someone who is at a lower credit score, or even if you want to try and just get into a different pricing bracket, ask your lender how you can go about credit repairing or credit rescore. At Prime Residential, it's so great that I have a program that we're able to work with buyers that have maybe a lower credit score than they want. For example, if I have someone looking to go for an FHA down payment assistance program and they're at a 600, but we need a 620, we're able to rescore those folks very quickly within a matter of days to be able to get you qualified. So instead of taking the normal 31 days plus extra stuff, we're able to really rapidly do that. So ask lenders about credit rescores. It will truly benefit your home pricing, and over the life of your loan, you're going to save a lot more.
All right. So after you have that pre-approval in hand, it's time to choose your realtor. Now, if you know a realtor or you've got recommended one early and you don't quite have your pre-approval yet, ask them for a market update. Ask them for, the past 30 days of sold, so you can see how things are going in your current market, wherever you want to live. If people are paying over asking, if people are paying at asking, those are all going to be important with your search. But after you've gotten that pre-approval, it's time to find a realtor and get the search started. For me, I'll start out with my buyer planner goals, and that kind of lets me know what you're looking for. It lets me know what you want versus what you need versus what are deal breakers. Maybe you want a larger lot size. Maybe you want 3 bedrooms, 2 bathrooms. Maybe you want 5 bedrooms. Maybe you want a smaller lot size so you don't have to take care of the yard. All of those things are going to be really important to help me kind of most efficiently help you find exactly what you're looking for. So we're not going out there and seeing 500 homes. So after you fill out the buyer planner goals, we're going to send you some listings. I'll send you some listings through my mobile app or the MLS, whatever you prefer. So you'll be updated with homes that match your criteria as they come on the market and even if they come off the market. It's nice to know, if something goes pending right when it does, so you can stop doing research on that property. You can stop even thinking about that property, kind of. A really good tip in your search process is to be ready to go see those homes when they hit the market. It's still kind of a seller's market. Things are kind of going pretty quickly. Homes are still selling in about 7 to 14 days on average. So it's important to be ready to go see those homes so you can be the first in and quick to make an offer if you fall in love with the home. As you write an offer, when you found the home that you would like to live in, the first thing is to get a comparative market analysis to help you gauge what the house could be worth. This is going to be important when you're thinking of a purchase price, whether there's multiple offers on the home. Maybe you're willing to pay a little more, but you don't want to, overpay so much that your down payment won't cover um, the difference between the appraisal. If you're getting a loan on the house, there's definitely that appraisal value, and that's going to be the maximum loan value. So there's kind of some limitations on that. Definitely talk to your agent and your lender to know what your kind of boundaries are. Next step will be deciding whether or not you want to do an inspection, and I will always recommend you to do an inspection. Although sometimes to win a multiple offer situation, you may have to waive the right to your inspection. I'll be able to guide you to make the best decision based on all the factors as we walk around the house, as we go see the house. We'll be able to check out the most important things, the most expensive things, to make sure that they're in good order, so you can skip that inspection. So there's additional down payment and escalation clauses, and those kind of happen in the multiple offer situations, and we'll explain those here in a couple slides. Earnest money, she kind of touched on briefly in the first slide. It's usually 1 to 2% of the purchase price, and it's usually paid right after mutual acceptance. So be sure to have that money ready. Although it's not required to purchase, it will really show that the sellers that you're dedicated to purchasing this home. Um, Closing date will be the last kind of big deciding factor in your offer, and you want to be sure to have enough time in escrow for everyone to get all the paperwork in order to be able to close on time. Remember, in real estate, time is of the essence, and I will be there to keep you on track to stay on top of every deadline.
Truth.
Yeah. Parts of an offer. So here's an example of a purchase and sale agreement. Um, usually your realtor will fill this out. It contains buyers and sellers' names, the date of the offer, the expiration of the offer, which becomes important in those multiple offer situations, where the property is, not only the address, but the legal description, things that are included with the property: stoves, refrigerators, washers, dryers, dishwashers, things of that nature. And then your purchase price, it'll have your down payment, it'll have how much earnest money is included in the offer, and how many days, which is usually 3 or less, to deliver that earnest money. We'll kind of pick out a title insurance company to get the escrow started, and finally we'll pick that closing date. And Haley.
All right, so let's talk about interest rates because it is so, so important. And especially everyone's seen the news, everyone knows that it is a moving. And, Victor was so right. Time is of the essence. And not only that, it is a moving target. And this is why it is so important to have the right people in your corner, to have all your documentation ready to go, to have, like you said, have that earnest money ready available, because when it's time to move, it's almost like you got one shot to put your best foot forward, and that's exactly what you're going to want to do. But once that's all taken care of, we'll bring it all back. You'll be good to go. Your PSA will be in, and now we kind of get to go into more of the numerical essence of the loan. So let's talk about interest rate and pricing, and why it is so, so important, and why you'll always hear lenders say, we're going to ballpark an interest rate for you, but it really comes down to you putting in an application, and so we can get a good idea of your financial picture. Because if you can look at this list, there are a lot of factors that go into your personal pricing of your interest rate. And it's so important to know that it's not going to be, like I said, a one size fits all. You're not going to be the same as your neighbor. You're not going to be the same as your uncle. It is going to be about just you and your financial situation. So it is not lenders trying to just say, we don't know, or anything like that. It's truly just, it is so unique to you, and it would not be, it would actually be a red flag for you if you are talking to a lender or even talking to an agent and they're giving you interest rates. That is a huge red flag to see. You don't necessarily want someone that's going to just be giving you interest rates without seeing any type of information. That is not a good practice. So investors use what we call risk-based pricing, and these factors include, but aren't limited to, the middle score of your borrowers. So we kind of touched on that earlier, how there are different tiers when it comes to credit score. A 720, and they usually go up in increments of 20, but a 720 is going to be different from a 740. It's going to be different from a 680. So it's really important to know that your credit score really does play a factor. So when you have a lender like myself that are able to do things like rapid rescores to actually get you qualified at that higher level, that's really important and a great asset to have. Another thing to think about is loan to value, not low value, loan to value, or your down payment. It really shows when we talk about equity. If you're coming in with 20% down, great. You're going to have a different interest rate than someone coming with 15% down, coming from 5% down, coming at 3% down. Those all have different levels of pricing. So you can already see now there's two different things. If your credit score is different and you're coming in with a 10%, you're going to have a different pricing than someone, with bad credit, but a higher percentage. So there's already factors there. Your loan amount too is going to go into that. So if you have a high loan balance, if your loan's going to be, $800,000, it's going to be different than a loan at $300,000. Loan terms as well. So if your loan term is 15 years, that is going to be a much more attractive looking interest rate than a 30-year interest rate. The 30-year interest rates might have the lowest monthly payments, but they do have a higher, or what appears to be a higher interest rate. 15 will most likely outprice a 30 by over half a percentage, usually, if not more. And I'm being very conservative, mostly because we're live. So it changes day to day, and it definitely changes with all of those factors we've just seen. But check on all of that kind of stuff when you're deciding on what loan program works for you. Another type of risk-based pricing is the type of property. So a condo is going to be much more riskier to investors than a single family home, and therefore it will be priced differently. You're going to see higher interest rates on condos, mostly because they are much harder to sell in the eyes of an investor than a single family home. Same with a townhome. So the number of units as well also plays a factor. If you're getting a 1 unit, it's going to be priced different than a 4 unit. And then again, own occupancy is another thing we look at. So owner occupied, vacation home, investment home, all of that is going to be totally different. So when you're looking at all of these, and there are other little things as well, but on the most high level stuff, you can see how different it is for interest rates for people. So truly, when you're asking folks, what are my interest rates? It is so important to keep in mind that the lender is going to be going through all of these checklists in your head, and don't be surprised if they come back and ask you more questions about your scenario, so they can better get an idea of what your interest rate might look like. But like I said, best thing you can do is get your application in. And again, you don't need to be afraid with getting qualified with different lenders. It's not going to hurt your credit score, and it's only going to make you more and more informed. And then let's chat about mortgage insurance. This is so important when you're looking at a home, especially too if you're really looking at monthly payments. When you're coming in at a 20% down, we don't need mortgage insurance. So this is only for down payments of under 20%. So what is mortgage insurance? Well, it is paid for by a borrower or buyer to protect the lender and investor in case you default on your loan. It is paid in a couple of different ways. The FHA is a little bit different. VHG doesn't have it, so we're really just talking about FHA and conventional loans right now. But FHA, you pay it monthly and upfront. So there's monthly mortgage insurance and then upfront mortgage insurance. On FHA, insurance will last the entire life of the loan with no possibility of removal unless you're coming with over 10% down. So if you're coming at a 15% down on a home, you will be able to remove mortgage insurance after 10 years. But if you are coming down with 10% or less, you are going to have that staying on. So one thing you can do to think upfront is looking at refinancing a little bit down the line. And so you'll be able to take off that mortgage insurance and get you into a different loan program. Conventional, you pay monthly and upfront in a single premium or a split premium. It can be petitioned to remove once the loan to value is at or below 80%. It will fall off itself on a conventional loan at 78%, but if you reach 80% loan to value, you yourself can call and have that dropped off. But it's good to know that if you forget, it will be taken off at 78%. But it really is good to call and petition, and you will have to call an appraisal and get another appraisal to get that taken off. But it is a great way to save you some money for having to pay mortgage insurance. Okay, let's finally talk about some Washington State home financing programs. These are going to be your down payment assistance programs. And truly, right now, as things are changing in the market, as we are seeing higher interest rates, looking at down payment assistance programs is becoming more and more popular. They are wonderful. I cannot say more about these down payment assistance programs and their ability to help you get into a home. These are for folks that have, pretty good credit, but really the only thing that we're missing is just a little bit of assets to get into a down and to get into a home. So there have a few programs. So the Home Advantage is one of those programs. It's a statewide loan program. There is an income limit that you need to be aware of. So if you are in a home with more than two incomes, if they do equal above 160K, so if you're both working, 85K and 85K annually, you may be over the income limit for the household. But check with your lender on that so they can see. There might be things like if you work commission, we might be able to look at different stuff versus if you're just working a base salary. So keep that in mind. Eligible loan programs and how these work is they act as a second lien on your home. So if you think of it almost as getting two mortgages, you're going to get the first mortgage and then you're going to get a down payment assistance. The first one will have an interest rate. The second one doesn't. And I'll prep everybody here, and all my lender friends out there are going to totally agree with me. But prepare yourself that you are going to be taking a higher interest rate if you're going to be using these. That is one, and if the only downside sometimes looking at one of these programs is you will have to take a little bit of a higher interest rate. But talk with your lender of what that looks like, and truly these are really homes to help get you into a home. There's great benefits owning versus renting that if you want to reach out to Victor or myself, we'd be happy to chat with you about those differences between owning and renting and whether or not it makes sense for you. Keep going a little bit more about these down payment assistance. The maximum loan amount that you can get is up to 4% of the first mortgage. So the first mortgage you get It's going to, if you get $100,000 loan, versus you're getting $4,000. Funds can be used for the down payment and closing costs. Like I said before, the deferred second mortgage is that 0% interest mortgage. You can refinance it off. We'd like to see around 9 to 10% of appreciation to be able to knock off and refinance. So get with your lender; they'll be able to see that. But that's one of the ways that you can get it off. Or obviously, at the time of sale, you would just repay it. It's payable in 30 years, or like I said, or upon refinance or sale. Yeah, great programs.
Awesome. And a little deeper dive on the realtor half of the offer. So we have inspection and we have appraisal, and that although they're very similar, they're also very, very different. Both are paid by the buyer. The inspection usually is paid out of pocket at the time of the inspection by the buyer. Usually costs around $400 to $600, and inspectors are there to point out visual and material defects of the house, so you can have an idea of upcoming repairs. You kind of know what could break in the future. Kind of get the life of the roof and how long things could last for you. Usual callouts could be HVAC service, missing old smoke detectors or CO2 detectors, and the big one for VA and FHA will be the earthquake straps on the water heaters. Uh,
Yes, that is huge.
yeah, it's definitely required. Usually an easy fix though, so no worries there. The appraisal usually costs around $800 to $1,000, and it's paid out of escrow on the buyer's side. So the buyer does pay for it, but it's paid out of those closing costs, so you don't have to pay that until closing day. Appraisers are looking for market value of the property, usually to protect the lender in case of a default. They use recent sold comparables in the area just to make sure the lender is not lending more than the home is worth. For FHA, VA, and USDA loans, they're also looking for safety, security, or structural soundness of the homes, just to be sure it's going to last the life of the loan. These appraisals are a little more strict to comply with the government standards. And then the little deeper dive on the additional down payment and the escalation clause. The additional down payment is used mainly in multiple offer situations when the house will likely be sold for over the appraised value. Your AD will cover the difference between the appraised value and your purchase price. For example, if you offer $300,000 on a home and it only appraises at $290,000, you'll need $10,000 in additional down payment to cover that difference between the appraised value that the lender will lend you and the purchase price that you have offered. The escalation clause is to kind of keep your buying purchase price as low as possible. So this is also used in multiple offer situations and will escalate your offer in increments to beat out any other offers without having to rewrite your offer. It's another way to make your offer stand out a little bit more and let those sellers know that you're serious about purchasing this home. So the example would be if you offer $300,000 with an escalation of $10,000 in $1,000 increments, there is another offer at $305,000. Your offer will automatically turn into an offer at $306,000, and it will go up in $1,000 increments up to $310,000. So a quick little timeline and a view of what your home purchase timeline could look like. Say you want to be closed by April, you'll want to begin doing your research on your team and getting all the paperwork gathered together in January to get that pre-approval done by February. It's usually a pretty quick process. If you want to be a lot faster and you have all your documents ready, that can definitely be done in a day or so. To begin your home search in late February, early March, and get under contract by March. Usually between getting under contract and close of escrow is around 30 to 45 days. Just make sure that you leave enough time for everybody to get all their ducks in a row for you. While closing day may not be your move-in day, it usually is the day that you get your keys. Usually, recording numbers don't come around until late afternoon, early evening. So don't really plan on moving in on closing day, but maybe the day after would be all right. Once you close on a home, you'll know that your first payment is not due till not the month after, but the following month. So, for example, if you close April 15th, your first payment's not going to be due until June, and that kind of gets you some time to get ready to pay your new mortgage. So, working with Haley and I, we have one thing in mind is to help people have a stress-free process in getting into real estate. Real estate is one of the easiest ways to leverage your money and begin building future wealth with you and your family. We started these classes to be able to educate people and understand the home buying process. May be complicated, but it can be smooth and easy if you find the right team to work with. We love to connect with new people and create those relationships to help people grow. Helping people is the common ground that not only brought us together, but is the main drive as to why we are in our respective careers. You can definitely count on us to get you to the finish line of buying your first home. So we've left a little bit of time to have have a few questions. If you have any questions, feel free to ask them in the comments section. We'll leave this screen up just so you can screenshot or write down any of our contact information. And we have a couple questions that we can answer for you guys. First off, we'll start with, how do I pay my realtor? For the buy side, if you're buying a home, the realtor is actually, it's technically free for the buyer. The commissions for the realtor, which is the only money that we make, is paid out of the seller's side. So it's paid out of escrow. You don't even see it come out of anything of your bank accounts or anything like that. Basically, the seller has set up a commission for both the selling agent and the listing agent, and everything gets processed at closing day.
Great. Another question that we saw come through earlier was, how much will property taxes cost? And that is a great question, especially when you're looking at places in Washington State where truly it can be pretty different neighborhood to neighborhood. So a great way to look up all of the property tax history is to go into Zillow, or I'm pretty sure Redfin has the same thing, but I use Zillow pretty consistently to look all the way down. If you click on the listing, if you scroll down, you'll be able to find a section that says payment tax or property tax history. You'll be able to see, gosh, as far back as it will let you go, you'll be able to see what the property taxes have looked like. If there's been increases in the years, you can get a good idea how much it's increased on the current year. One thing to be made aware of sometimes, especially if you're looking at some homes in the Olympia, Tacoma area, Tumwater, we do see some folks who are buying homes that have been owned by older homeowners who may have been able to have a property tax exemption or like a discount. And so sometimes when you're looking at those properties, what we'll see initially is that on the website there will be a much lower property tax. I would say it's pretty normal to see a $600 monthly payment for property tax, especially in King County. But if you're seeing something that's looking more of like, why is it only $100-something? That's a steal. That's probably because there's some sort of discount on it or something's up. So definitely go and ask your lender if the home next to it is, why is that home 350 and this home is only 100? Something's a little different. So that's kind of the high level view on property taxes. But you'd be looking up nothing that your lender isn't looking up if you're using Zillow. So it's a great resource to look up property taxes when you're trying to look at monthly payments.
All right. And the next question would be, why do I, as the buyer, pay for an inspection? So the buyer pays for the inspection because it's for the buyer to know how their home is going to perform in the future. And the inspector will usually kind of call out how long you have left on your furnace, how long you have left on your AC unit, how long you have left on your hot water bottle, things of those natures. They're going to point out whether or not plugs are working, whether or not light switches are working, whether or not any drains are draining and sinks are flowing, hot water and cold water as well. So it's basically a step of research for that buyer so that buyer can know what to expect in the future.
Awesome, awesome. And this is another question that we got, and it's kind of one of my favorite questions that we've really gotten. But what is the difference between getting pre-approved and pre-qualified? Great question, because what you'll see a lot of folks, even if you're looking even on my Instagram page, what you'll see a lot of times is people say get pre-qualified with your lender, and truly that really just means, and the only difference is being pre-qualified does not mean you're pre-approved. Being pre-approved means you're definitely pre-qualified. So being pre-qualified is that very initial step. It's truly you've filled out an application and a lender has looked at it and really just said it looks pretty good. It looks good. That's really what it's saying. Things look good here. The next step after getting pre-qualified is when you've actually sent in some hard documentation and we've gone through a little bit of the processing and underwriting side, when we have that pre-approval letter generated for you, where we've had an underwriter say, yes, this is good. And that is the true difference. So it's almost like a square and a rectangle. You really can't be pre-approved if you haven't been pre-qualified, and you won't be pre-approved unless you've been pre-qualified. So it is definitely one of my favorite questions, but don't get the two mixed up. If you've only been hearing you're pre-qualified from your lender, that doesn't necessarily mean you've been pre-approved. So definitely check before you go tell your agent, I have been pre-approved, let's submit an offer, because you may never know. So definitely check.
All right, and I think we'll go ahead and wrap it up there. Do you have anything else you want to add, Haley?
Um, I don't think there's anything else out there to add on this side other than just have fun, have a great time doing this. You'll have folks who'll be able to do most of the heavy legwork for you and truly put it on them. Treat your real estate agent, treat your lender almost like a lawyer. Like, have all of them do the talking. You should never be doing any of the talking to any of the big folks. You really shouldn't be calling a listing agent and doing all that stuff. Trust your agent, trust your lender to take care of all of this for you, and then just have fun. This is going to be the biggest, most exciting journey of your life, and humbly being able to play a part of that is so thrilling. I've been working with Victor now for a very long time, and I see every time he works with someone new, being able to, really see the joy and what all of the journey that they go on, and then that closing day, is such a celebration of a culmination of your life's journey, and as well as just the whole process being exactly what it is. So I'm just very grateful for the opportunity to be here, be able to be with Victor. It's been a great, great ride, and it's only the beginning.
I totally agree. Well, thanks again for everyone for watching. If you have any other questions, leave them down in the comments. We'll reply and go forward as things goes on. Thanks again. Bye-bye.